You're listening to Partnernomics Podcast, where we discuss the art and science of developing successful strategic partnerships. To learn more about the suite of Partnernomics solutions, visit partnernomics.com.
Welcome back to another episode of Partnernomics Podcast. I'm your host, Mark Brigman. And on today's show, we have Mr. Peter Lee-Johannessen with us. Peter's joining us from the other side of the world, from Norway. Peter, how you doing? I guess this afternoon for you.
Hi, Mark. I'm doing good. Thank you for having me here.
Yeah, so Peter is the Senior Vice President and the Head of Strategic Partnerships for DNB Bank out of Norway. So Peter's there running their partnering initiatives, and man, they have some really good stuff going on as we've heard. The whole fintech space, technology in general fascinates me, but the fintech space, I can't really think of many industries that are being transformed as fast or the way that the banking industry is being transformed right now. So this will be a really fun, really lively conversation. But Peter, thanks so much for joining us.
Thank you, Mark. Looking forward to it.
How did you get into banking? You know, somebody may assume that you went to college and got a degree in finance or accounting or something like that, and you spent your time in banking to climb the ladder to get to where you are now, leading all the partnerships. But tell us, what was the route that you took to get there?
Yeah, no, I definitely don't see myself as a banker. So I have more like a technology background. Coming up from the university here in Norway and also studying in Munich, it started out for me actually in startups. Coming up from university, I wanted to create something of my own, building my own startup. This was back in 2006. We jumped on the internet wave, created applications for mobile phones. Didn't work that well, had some good learnings though, but took the step into the corporate world, become an assistant to the CEO of a telecom company. Wanted to learn as much as I could from the corporate world and then take the step back into startup world again. But I actually did quite well in the corporate world as well. Enjoyed that. Got a product management role and was headhunted for this telecom company to Telenor, which is one of the leading telecom companies, heading up all the products for one of their telecom operators. And from there, I got the chance to go into partnership. I was not sure what that actually means, but from a product side, I always liked, of course, existing products, but always had some urge to find new business opportunities for the companies that I work for. So I was convinced by one of the top leaders in Telenor to join the partnership team, and never regret it. Build up their partnership team from 2.5 person to a team of 25, and then I was recruited then into banking to kind of do the same journey there. So that's how I ended up there.
Awesome. Well, Peter, I want to dig in a little bit more about your entrepreneurial journey. Tell us a little bit more about that. So you had built a software application that you're looking to put on mobile phones. Is that correct?
Yeah, exactly. So I had an engineering background where I did a mixture between programming and economy. I actually worked for another startup at that time, creating games for feature phones and the old Nokias. They barely had a color phone and very little memory. We had an idea. It was quite similar to TripAdvisor, but quite early on. And me and some of my study pals, we launched this idea in Germany because that was the biggest market in Europe. We won a lot of prizes, and it went really well actually until the finance crisis 2008 and the funding stopped and all that stuff. But yeah, as you know, being an entrepreneur, that's an experience and something that also benefits you when you enter into the corporate world.
Yeah, no question, no question. Well, Peter, tell us a little bit about DNB Bank, about the bank itself. You know, how old is it? How big is it? Where is it? You know, where are your clients? Where do you geographically serve? And then how do partnerships fit into it?
Yeah, so DNB Bank, not that many people outside of the Nordic region have heard about it, I guess, but we are the largest financial institution in Norway and the second largest in the Nordics in terms of market cap. We have international offices around the globe, but mainly following our international clients overseas. But we are world leading in shipping and energy and a few other close to Norwegian industries. But yeah, so DNB is the incumbent bank, very old, but we are in a market where it's very digitalized and it's a closeness between governments and the different corporates and so on, and which makes the landscape for partnership very good. It's a high trust among the citizens in the Nordic region, I would say. So yeah, I think it's a long culture of partnership, but then as a traditional bank, and you mentioned in the beginning, Mark, like we have this huge shift now, and the speed of shift is so fast that the old mindset is not valid anymore. You are not able to create everything yourself, and that's where I think partnership comes in very strongly. And so seeing this shift in requirements from users, in technologies, in regulations, like we had a huge PC2. I'm not sure if that's something that is that familiar outside of Europe, but that's kind of opening up a lot of the data that the bank has to others. These things kind of force the bank to think partnership because we are not able to develop everything ourselves anymore. But yeah, DNB, very exciting financial institution, and done some great things within partnership, as you mentioned.
Yeah, it's almost like it's following this parallel track of traditional retail, you know, where 10 years ago, you know, we just went down to the department store, we grabbed our shirts, our clothing, our shoes, our whatever. And so much of that is happening now electronically. I mean, it's being delivered to our doorsteps, but now we're talking about banking and financial services where it's all digital. But we're going from, it seems that, you know, all these physical brick and mortar stores to primarily just going digital. What does that look like, Peter, from your time that you've been in banking?
Yeah, no, you're spot on there. So we had a similar transformation as a lot of other industries, and like our physical presence, of course, is built down quite a lot, and we serve most of clients now digital, and it's digital services that is our primary channels in a way. Of course, we still have physical presence and customer service and all that stuff, but yeah, being able to serve the customer digitally, it's also very efficient in a way. So for now, we can offer loan. So if you want a mortgage, you can apply online and get a mortgage in seconds. Like that's something that was unheard of just a few years ago. But that we can do because the Norwegian society is so digitalized. We can get all the documentation that we need from the different institutions and then provide you with a loan within seconds. And also, for example, in real estate, so we are the biggest real estate company. But if you want to sell your property, for example, you can now, instead of having one real estate agent doing this for you, you can do it yourself through a self-serve portal that we now recently launched. So I think kind of the opportunities for us in the digital space is humongous. It is huge. So it's exciting, really.
Absolutely. It's We all can ask ourselves, with change, does that bring threats or does it bring opportunities? And I think the answer is yes. It's in the eyes of the beholder.
Yeah.
But look at what banks have gone through. But you can see the banks that have really embraced this new world that they need to create with digital. And you see some just doing very, very, very well for themselves. But to the point that you made earlier, it's very different than what they've done before, so it requires a significant amount of change. Peter, you had mentioned before a little bit about regulations and how regulations are changing. And then obviously the financial markets and institutions across the globe are heavily regulated. But I'd like to have you just speak to that just a little bit more, because it sounds like regulations are being adjusted or maybe softened a little bit in some respects that allows banks to be more digital and to be more capable to share data, which is really needed in order to stand up these new services.
Yeah, no, I think you pointed out quite well that it's a lot of it is both an opportunity and a threat for us. If you look at the kind of the regulations that is opening up things, a lot of that is like PSD2, which is a new regulation saying that we have to make account data available for qualified companies that would like that information. So you can access DNB's account information in your surface, being say Walmart or anyone who wants to make an app and wants to show different banks' account information, they can do that, which is something that we probably wouldn't have done if it wasn't for regulation. But now it's there, and we definitely see opportunity as well. And then the other thing is that you can, for example, do payments. So you can do account payments. So if you are, say, Walmart again, and you don't want to pay all the card schemes a high fee for the payments through, for example, MasterCard and Visa, you can do this through the PSD2 APIs that we have and do it directly from the bank account, and then the fee is it's much lower than what the card schemes can provide. So this is kind of the dynamics when it comes to regulation. You need to shift a lot of your business, and this open up for competitors. I think what we really feel, or not saying it destroys us sleep, but what is a little bit unfair, it feels a little bit at least, is that so many actors moving into finance, and they are kind of eating of our cake. But as a finance institution, you are bound to the license that you have as a bank, and within that, it's regulated for certain usage. So we have very limited allowance to actually eat outside of what the traditional financial cake is. So that's a little bit hard sometimes, because you see like car companies, you see big techs, you see all these other players moving into finance, but you are not able to move into their space.
That's so interesting, because that just screams partnerships to me. You know what I mean? You have to, it seems that especially if you're a big incumbent bank, and if it's fairly limited as to your ability to grow in scope, to go wider, to go outside of your traditional charter, but customers are now demanding these new and tangential services that you'd mentioned, real estate being one of those, then you better be able to know how to partner. It sounds like.
Yeah, exactly. And I think that's also a realization we have done. If we want to take a new strategic position, it makes so much sense to partner up with the best company within that field and then move in that direction. But yeah, it is a hard balance, because a lot of the border also for what you're allowed to do as a bank is not black and white. So you need lawyers as well that is willing to take the risk of challenging the borders and taking a little bit more risk than maybe a bank normally do. Yeah.
So Peter, so partnerships in DNB, is there a particular partnering model or something that you have adopted, or just the way that you've structured the team, or how do you think about partnerships?
Yeah, so we talked a little bit about this, Mark, and I think a lot of your thinking, which is more on the business development side, resonate very well with how we think as well. And even though we haven't followed the framework that you have to the full extent, I think the way we have structured it on organization based is more, we have a center of excellence on a group level, which is my team, which is kind of having a partnership contact in his business unit, and we kind of coordinate the whole kind of partnership parts across DNB, and professionalizing from a central unit. And I think also the part on different partnerships. So if you look at traditional vendors, we don't look at them as partners. But then again, we identified that a lot of the startups, they actually need more like a partnership approach to them, because they maybe don't know their own business model that good yet. They don't know how to handle a big corporate like DNB, so they need like a more close follow-up and so on. So my team is supporting a lot of the startup vendors kind of relationships that we have, even though it's more like a vendor and not partnerships. And then we have 3 other types of partnerships that we look into. One is a very light touch partnership, which is more like referral, or more like a marketing stunt. It could be like a revenue share model where it's a company that need distribution, and they use our distribution channels to kind of to get their product out there, and we get a revenue share. It's a very light touch partnership. We can do it within a day. And then we have like a little bit more deeper model, which is more like a co-development model, where we, for example, would like to develop a product or services, and we go work with the companies to develop this product or services together with them, and we could take it out to the market together, or different models there. And then we have a co-ownership model, which is what we call the deepest kind of partnership, and that's more like a 50-50% joint venture. We would like to take this position together, say it's a mobility company, and we spin out something together, and have share ownership in that.
Peter, what from a recruiting perspective, whenever you're trying to figure out which partners to go find, and then going through that recruiting process, what is that like from your perspective at a bank?
Oh, yeah, that's so hard. So various experience with that as well. But yeah, I think from your previous podcast, you've been touched upon on how relationship is important, that you are able to connect and make your way, the street smartness and all that stuff. That's definitely like a quality that I look for. So stakeholder management, also be able to kind of drive projects, but maybe lately what I really see that you need to have is this stamina. You need to kind of be able to bang your head into the wall 100 of times, because like coming up with these ideas, bring it through the organization, it's really tough. So you need to have this persistent, and even if you're not able to get your idea through, you have to kind of be able to be motivated and jump on the next opportunity in a way. So you need that persistence. If you don't have that mentality, you won't survive in this role.
Yeah, absolutely. Well, Peter, just a second ago, you had mentioned, the different types of partnerships or relationships that your team forms with companies. And one of those you had mentioned is a joint venture, which is obviously includes some equity and some form of legal control. And then obviously your team also has, truly strategic partnerships that are non-equity plays, but it's all about influence and trying to influence each partner and getting this proverbial win-win outcome that we're looking for. But from a from a management perspective and a leadership perspective, from your team to these different partners, are there any differences between those two approaches, a joint venture approach as opposed to a strategic partnership approach, a non-equity play?
Yeah, it is definitely a difference. So a lot of the more strategic partnerships we talk about is maybe the more long-term partnerships that we have. So my team is also more like a key account managers for some of the relations that we have. And there, of course, if it's not a continuous business development, we don't call it partnership, but that's why we are there and we drive that continuous business development. And I think also the strategic partnership part for us is, it's not all about revenue. It could be also more like we do it because it's strategically important in a way. So that may be a little bit different from the more joint ventures, but then again, joint ventures are also highly strategic. So we don't probably have a very set separations between those two. We just look at it as a deeper level of partnership when we also have equity within it.
Well, it seems as a large incumbent bank, that's the largest in your country, or you're really big, you have to put out solutions that are there to not only protect your base of revenue and base of customers that you have today, but then also grow that. So to your point, there's relationships and there's partnerships, there's capabilities that you bring in that's probably not revenue first, or maybe even not revenue first or second, but it's more about just creating the experience, creating the stickiness, keeping the customer base that you have there. And then obviously you would then partner with other companies to bring in new capabilities that your customers are looking for, or maybe even it's so early that your customers aren't looking for it yet, but you know that they will be. Talk to us a little bit about technology, fintech, this massive fintech space that's just continuing to grow. What is it like from that side? Because whenever I look at your background, being in telecom, being in wireless, being in applications, it's almost like you have more of a fintech background yourself than you do a traditional financial services background. So it makes perfect sense of why DNB would bring you in to do this. But talk to us a little bit about technology itself and the fintech space and these new solutions that are coming in.
Yeah, I will actually touch upon your previous point a little bit before that, because it's related. And I think from the tech side, what we see is, for example, the big techs, they're really eager to get into fintech. And you see Apple Pay, Google Pay, you see Amazon giving out the business loans and so on. And one of the protective things and the good things of being in Norway is that Norway and the Nordics are so small markets that these big players don't care about this little pocket that we are in that much. So we are able to kind of watch other markets and the solution they put out there, and then do protective measures within Norway. And I think some of the background that I have from telecom was actually working with a lot of those big tech companies, and also made it interesting for us, or at least to hire me for this role. And we kind of saw the same thing in telecom, right, market, when they kind of move into Messenger and all this, and challenge the telcos and so on. But yeah, so what we actually build like the biggest fintech in Norway and now the Nordics, not the Nordics, but within peer-to-peer is the biggest, called Vips, which was a protective measure and becoming like the primarily payment solution in Norway, and also the ID solution to kind of cater for the entrance of Apple Pay. So Apple Pay don't have any they nearly don't have any market share in Norway. So that's interesting. But I think other trends like crypto and how these digital banks that is more global are challenges us. They are totally digital. They are global, and also the way that a lot of new players are earning the money on different ways than we do. For example, if you're Google, for example, you can earn your money on advertisements and you can give away banking for free, right? So having those kind of challengers entering your market, that's kind of the call it fun, but that's some of the challenges that we open.
Well, Peter, what kind of advice would you have? I know you guys look at, evaluate a lot of different startups and these fintech companies that have new solutions. And sometimes, you guys, DNB, could potentially be the first big company, the Sumo, the big bank that they would work with. What kind of advice would you have to some of those startup entrepreneurs who are working on fintech solutions?
Yeah, if they would like to work with DNB, I mean, I'm on LinkedIn, so it would be great if they take contact with me. But we really appreciate startups applying for our accelerator program, which we just opened the applications for. And there, it's a very good way for the companies to kind of get to know DNB, and also for us to get to know them. They will get, if they want, they will get an investment as well. And it is a 3 months long program. So that's definitely one. But either way, if they would like to work with DNB, read about DNB and try to come up with some concrete suggestion on how a partnership with DNB could look like, and then get in touch. That's the best advice.
Well, Peter, it sounds like some of your partners, you guys will help get them distribution, or you'll take their product services and then essentially extend it on to your clients. But then there's also some partnership opportunities where you will co-create some different solutions, whether that includes a joint venture or even going outside of the joint venture space, but you'll do some co-creation that way as well. Is that accurate?
Yeah, that's very accurate. And I didn't mention that we also have like a venture arm. So we're doing minority stakes as well. So it doesn't have to be like 50% of your company or so on. And that we also do in companies that are disrupting us. So basically take a majority investment in fields that we think is interesting, for example, crowdfunding and other areas that we would like to learn more about. So it's different ways to kind of partner up with DNB, definitely.
Yeah, Peter, I'm fascinated with different companies, and man, we hear more and more about this. It seems like each week. But you had mentioned your accelerator program, and you talked about the accelerator program a little bit. But I'd like for you, if you would, just share a little bit more about, really what is that program? When did you guys start it? Why did you start it? And what have you seen for results so far?
Yeah, this is our 5th edition, and we partner up with the best incubator hub in Norway to run this for us. And so it's a cool program with the startup lab in Oslo. And we take in up to 10 companies, but we never took 10 companies. For us, quality is the best. So it has to be, we screen a lot of companies, several hundreds, and then we choose, of course, the one that we see some fit with the bank, and it's very well anchored within the top management. So they will get like a sponsor from the group executive management. They will get a mentor from the relevant area, and then they will get a mentor from startup lab, and then they will go through kind of set process the startup lab has for kind of accelerating that company. And they will also get the option of a 1 to 3 million investment as well before the startup program. So for us, it's resulted in several partnerships and a few investment as well. So we took from a venture fund, we took some majority stakes. And for some of the companies, even though they didn't find DNB as a partner, they at least have been very successful afterwards because of the help, or at least they say that because of the help that we provide them through an accelerate program. And so for us, that has been very successful, I would say.
Yeah, that's a great program. I love whenever companies do that. I think as an entrepreneur, somebody that started 6 different companies, you could learn so much by having the mentorship and being around other people, and especially this opportunity where they have the opportunity to be mentored with and to work with somebody that could be either a big incumbent partner for them, or maybe even an acquirer if they have the right technology that they're putting out there. So man, what a great opportunity for companies there. But Peter, thank you so much for your time. It's been great chatting with you some more, learning more about the great work that you and your team are doing at DNB. And man, it's going to be fun watching the accelerator, watching these great companies come out of this, and watching the great work that your team does there at DNB. So thank you so much.
Thank you, Mark. Thank you for having me.
Partnernomics Podcast is brought to you by Partnernomics. Learn how to leverage the power of partnership. To listen to more episodes of Partnernomics Podcast, visit partnernomics.com.